What's up, guys? Stas here. So yet again, another green day in the stock market today. S&P 500 up 25 points, up over 0.8%. The Dow Jones up over 1%, 270 points in the green, with the Nasdaq doing the worst out of the bunch, but still very strong, 0.61%, up $60 on the day. And in this video, we're going to talk more about the markets, breaking down some technicals, and I also want to share with you guys 5 stocks that I'm looking to trade, that I'm looking to buy right now in the month of June. And if you guys actually stick till the end of the video, there's going to be some bonus stocks and ETFs that I'm also looking to trade. So if you guys enjoy the video, find value in it, as always, hit that like button for me, consider subscribing to the channel, and feel free to check all the free links down below in the description box if you want 2 free stocks from Webull valued up to $1,400. And if you want to be further connected with the Strive Smart community via the Discord chat and the Facebook group, all of that is linked down below in the description. And did I mention it's free of charge? So yeah, go take advantage of that, and let's get right into the video. So let's kick it off by starting off with the S&P 500, which again up 0.82%, up about 25 points. And with today's massive move, well, let's not get carried away, because if you guys were watching the markets a couple months ago, well, at this point, it was like 2 months ago, 0.8% is nothing, because we were used to moves of about 5, 7%, 10, 12%. Just looking back at that, guys, what did we live through, right? That was just unbelievable. We were seeing the circuit breaker hit on the S&P 500. Like, what the heck? Well, now 0.8% compared to that, yeah, it's not that great, but still, it's pushing us close to all-time highs. And if you see the Nasdaq here, we'll go over it in a minute or two, that's actually very close to all-time highs. But the S&P on the flip side, it's still pretty close, but it has a ways to go of about 8 to 10%. But we're not worried about all-time highs at this point. What I'm looking at is the next resistance, which with today's green day, we got closer to it, and that's about 3120, right? At this point, and I've been saying this on the channel ever since we broke 3020, I was saying the next level is 3120, and that's exactly where it seems like we're going, right? And let me tell you guys why the bulls won the day. It's very clear. If we take a look here on the hourly chart, you guys can notice that we broke 3070, which was also a level we were talking about in the Discord chat today, as well as in yesterday's video. Notice how in the past couple of trading sessions, on the 28th of May, on the 29th of May, on the 1st of June, which was yesterday, we failed breaking out of 3070. So the fact that, and honestly, today we double topped at 3070. So the fact that we broke out of it, closed at 3080, and we closed above the old resistance as a new support, that is very good here for the bulls. In my eyes, that's a great sign for us to get to the next point, which again is 3120. So it's looking very solid here, guys. Very strong for the bulls when it comes to the S&P 500. And you guys know SPY is an ETF that tracks the S&P. I'm aware many of you guys actually just look at that as opposed to the S&P 500 index itself. So when we're taking a look at SPY, what correlates, or rather, what level correlates to the 3120 level on the S&P? Well, it's going to be around $312. And if you guys haven't gotten it yet, SPY, if you do some math, it's pretty much just the S&P 500 divided by 10. That's pretty much, not exactly, but it's kind of what it is at the end of the day. If you notice how we're at 308.21, if you multiply that by 10, it's going to be roughly, right, 3080. So you guys kind of see how that works. It's kind of just a multiple of 10, or rather the S&P's 10 times the SPY. And when it comes to the Dow Jones, guys, again, 270 points in the red. We didn't break a resistance quite yet like the S&P 500. We didn't close above a major resistance, but we're getting there. We're actually looking to test and break out of 25,800, 700, which you guys can see is the next gap here on the chart, on the 4-hour chart. And you guys can also see a couple days ago, we got rejected at 25,000 25,750, and then we ended up selling off a bit, but ultimately we recovered, and now, again, we're right under that level. So for tomorrow, guys, watch 25,750, 25,800. If the bulls take that over, whoa, watch out above, because we could be going mid-26s and even $27,000 on the Dow based on this 184-hour chart. You guys can see it. The lines, the technicals, the candlesticks do not lie, right? If we break here, watch out for that move of about 5%. Very similar to how we called it out a couple days ago last week, right, when we were struggling at 24.6. We said if we break, watch for the gap up. That happened exactly to a T. Will it happen again? We don't know, but time will tell. And the goal is, guys, to have a plan set in place, understand where the technicals could move, and if they do end up moving that way, that's when you can execute on several trades on different stocks that are either in the Dow, or maybe, if you're trading ETFs that trade based upon the Dow, the S&P, the Nasdaq, and so forth, right? And when it comes to the Nasdaq, guys, again, up $60, up 0.6%. This one is the closest to all-time highs, and maybe that's why it wasn't ripping as much today, because it's funny. Sometimes the markets, they take the technical levels very seriously, which is why you see consolidation around these resistances on the supports, and maybe sometimes they don't rip out of certain price levels immediately, and not saying that's happening right now with the Nasdaq, because in general tech didn't do as great as a lot of other stocks today, but overall we're still about 1% from all-time highs, guys. We're pretty much exactly, actually less than 1%, about 0.85 to 0.9%. So this is a point where we could hit all-time highs tomorrow, the next day, right? If we see a big rally out of tech stocks, it could easily happen. So for me, that's kind of the gap that I'm looking for here on the Nasdaq. And believe it or not, we could be at a $10,000 Nasdaq, which is crazy to say, within the next couple of weeks here, especially with how the markets have been moving. But for me, am I looking to get into TQQQ at this point, which is an ETF that's a leveraged ETF? You can pretty much trade this to go long the Nasdaq, for example. Am I looking to jump into this? No. The truth is no, because the Nasdaq at this point, I see a lot more, not saying it's going to crash, but I see a lot more risk than reward. So for me, I'm not going long on any leveraged ETFs that go up when the markets go up, but I'm simply just watching them, and that's kind of what I've been doing, right? And sure, I'll day trade them, but I never swing trade leveraged ETFs. I've been burned too much in the past, and again, with the risk reward here, with the overall markets being very close to all-time highs, I'm not seeing much of a an amazing trade in place, right? And I could be wrong, things could change, but that's kind of my thoughts there when it comes down to the Nasdaq. I'm not looking to FOMO into the markets at this point, and I'm sure many of you guys can agree with that. And I'd love to know down below in the comments, what are your thoughts on the markets? As always, individual stocks, where do you see things headed? Do we get a $10,000 Nasdaq this week? Next week? What do you guys think? Let me know down below in the comments section. So as of what I personally did today wasn't that great of a day for me, guys, to be completely honest. When it comes down to trading, I had a red day. I ended up day trading Tesla. I lost money here on my initial trade with Tesla. I actually jumped the gun in a bit. I believe I got in roughly $902, $903. This morning, we noticed how Tesla was actually holding an old resistance as a new support right around 890 to about 900. We started rallying up. So I got a bit of FOMO, I'll be honest. I bought into some Tesla. I didn't go full-fledged into it because you guys know when I'm trading, I like to, manage my risk in a way that I only put 10, 15%, 20% of my goal position in at first. So I didn't really throw all my the whole kitchen sink at Tesla. But I did put a decent amount in there, and ultimately I cut my losses. As you guys can clearly see, it dropped all the way to 870. So I had a stop loss at about 2%. But the funny thing is, I actually ended up getting back in to Tesla. So I cut, I believe it was at around 890, maybe about 892 is where I cut, a little bit less than a 2% stop loss, more like about a 1%. And I ended up getting back in as we got closer to the 880s. And these shares, I'm actually looking to swing trade them. Call me crazy, guys, but I'm looking to swing trade Tesla. Ultimately, I think the stock is going to be able to go back to the 900s, mid 900s. And the idea here with this trade is get in close to this support 880, which is, again, where I'm in right now, roughly with these swing shares, and exit around 940, 930, 950. That would be the rough exit point that I'm looking at this point, which is around 6 to 7% away. So I took a little loss there on Tesla, ended up buying back into it. If you guys have been following Virgin Galactic, I'm swing trading this one. Didn't go too well today, down about 10%, down $1.70. Why is this happening? Well, they're looking to do a share offering with Vico 10 of 12.5 million shares. And pretty much when there's a share offering, guys, it dilutes the current shares, and a lot of shareholders don't like that. Because at the end of the day, they're viewing it like, okay, they're throwing more shares into the market. That makes my current shares worth less, right? And view this, an analogy to this could be what the central bank is doing with the dollar, right? So you have the dollar here, the good old dollar, the green dollar. Central bank prints more of these dollars. What is it going to do to the existing dollar? It's going to devalue it. So that's kind of the methodology behind, share filings. People, investors, they see this and they're like, oh, crap. But a lot of the time, it's a short-term thing. So we're down about 10% today, down $2. Did I cut my position? No. I'm still holding on to options and shares of Virgin Galactic. And ultimately, the chart is showing that we're in an overall wedge over the past couple of months. At this point, it's been about 4 months, and you guys can see we got rejected there at about $19.30, $20. This is kind of where we spiked up yesterday pre-market. We got rejected. That was the resistance on this wedge, but we're also holding the support of the wedge. So for tomorrow, guys, where is this going to go? It's going to pick a direction eventually, whether it's down, right, which would be bearish if we broke the support of this wedge. That would obviously not be good for my swing position, or whether it's bullish. If we pop out of $18.50, $19, and we start trending back up to the 20s, you guys know what I've been saying. I think this stock could easily go back up to the mid-20s, but we have to wait and see what these technicals show us. And today was not a good day for the gold stocks either. They pretty much gave all of their gain from yesterday back, down almost 4% for GDX here, Gold Miners ETF, down $1.30. And overall, we are seeing a bearish sign here, a bearish sign on the 4-hour chart. We got rejected by the 50 SMA at a lower high from the previous, being around $38. So that's not too good overall here on GDX. But if we zoom in a bit, 5-day, 5-minute chart, notice how the uptrend still seems to be intact here on the 5-day, 5-minute. Let me just erase this one. Well, the original uptrend from the past 4 trading days broke. It did break, but we are still, technically speaking here, at a higher low based on today's close, right? We got a double bottom, triple bottom into the close. Last high, or rather last low is at about 33.60. The one before that was 32.50. So ultimately, GDX at this point, guys, it is seeing some downwards pressure, but on the 4-hour chart, watch and see, do we hold that trend that I just drew? Do we ultimately get out of the 50 SMA resistance? If that happens, that would be very good for the bulls, right? And that's kind of what I'm watching right now. And I'm also long call options on GDX as well, $40 calls that expire sometime in September. So ultimately, today was not too good of a day for me. Again, my swings are red. Tesla is slightly green. I took a little loss in Tesla on the day trade. So let me know what you guys think down below in the comments. Am I an idiot for holding on to these? I'd love to know. Me personally, I think I'll make money over the next couple of weeks, over the next month or two, or else I wouldn't be holding these stocks and ETFs. And let's get into now 5 stocks and some bonus ones that I'm actually looking more into now. So the first one is going to be DraftKings, DKNG. And me personally, guys, I am not a consumer of DraftKings products. It's sports betting, right? I'm a big sports guy. I like the Birds, Eagles. I like the 76ers. I'm from New Jersey, right by Philadelphia. So I'm a Philly sports fan. But honestly, I didn't really get too much into, sports betting. I'm already in the stock market game, which in itself is kind of like educated gambling at the end of the day. So I figured, doing stocks and sports betting, I don't know. I might lose it if I do that. But ultimately, DKNG, this stock's been on fire. It IPO'd during this whole crisis, the whole CV madness here, and bless this company for IPOing during this. That's unbelievable. And the stock's gone from $17 up to $45 without there even being sports on. That's insane. Without there even being the major sports that people usually bet on. NFL, MLB, what is it? NBA, right? All of these different sports. So it's interesting how much DKNG has been going up, and you have to look at it on every pullback based on the technicals that we're seeing, because every pull down has made people money, and we're seeing it's pulling down now from $45 down. It went all the way to like $39, $40. This is the first big pull down that we've seen since the IPO. I believe this has to be single-handedly the biggest red day the stock has experienced, and honestly, 5% in the red for a recently IPO'd stock, that's not really that crazy. So ultimately, we're seeing some support now on the intraday chart for DKNG. We actually double bottomed and broke out of the moving average resistances on this intraday chart, which is a very good sign initially that this thing wants to go back up to 45. And if we go back to that 20-day chart, for me, guys, I want to see a break into about $42. At that point, we could get the confirmation that, okay, this thing wants to go back up to the mid-40s, right? So for me, I'm going to set an alert at about $42, create an alert. Mark is at or above, let's just say $41.95. Let's just keep it right there at $41.95. So if this thing gaps up tomorrow, we break $41.90, $42. I'm for sure going to get into this because momentum is clearly up, and we could be in the mid-40s by no time. And another thing that could happen here, which honestly I'm even more open to, is if we pull down and break $39, $40, watch where we could be going. This thing could end up going to the mid-30s, and let me explain why. Notice how this 50 SMA has been a support on this 4-hour chart for the whole time ever since the IPO, right? And if we break that point, $39, look at the gap we have to fill. And mind you, it's quite the gap of about 12% down. I'm not sure if we'll get that, but $35, $34 would be quite an attractive price, in my opinion, for this stock that could give us a potential gain of 20-25% if it's able to get back into the 40s and maybe even above 40s to a new all-time high. So DKNG, I'm loving this pull down. But I'm questioning myself, is the pull down done quite yet? And tomorrow should be a day where, hey, we get the direction, we'll get the news, and we'll see what happens. So Zoom Video Communications, they just reported earnings today. The stock went to $223 per share today. Now it's back down, or actually it went to $223 after hours. Now it's back down to $211. And let's go to the live news tab and see exactly what they ended up reporting, since I did not write it in my notes. Bad stas, I should have wrote it in my notes, but we can see here Q1 adjusted EPS 20 cents it came in. It beat the 9 cents estimated. So take a look at that. Over a 100% beat on EPS. And sales came in at $328 million versus the $200 million. What the heck? They crushed on both. So that's a double beat. They just completely destroyed estimates. Who was estimating them that low of revenue and EPS? I mean, geez, these analysts, they're really, undershooting ZM here. But overall, they crushed it when it comes down to, the double beat there. And let's take a look and see if there's any other interesting user data that we can take a look at here. Okay, we have guidance. Is this guidance? Video communication revenue. Oh, wow. Second quarter revenue is looking to be around $500 million. So that's a nice little hike from what they just reported. So that would be some nice growth. So yeah. Look at Zoom, guys, and we've talked about on the channel, right? They were having, 10 million users, active users back in December, and now in March, April, they had 300 million monthly active users. So this platform is growing like a weed, but the thing you have to ask yourself now is Zoom going to be here to stay? There are some threats, right? As the economy's opening back up, as businesses are opening back up and employees are able to go back into work, are they going to be using Zoom as much? The answer is probably not. And another thing is Facebook is coming with a product of their own to compete directly with Zoom. So these are some negative things about the company, but you have to ask yourself, the CV, it really did shift and kind of accelerate the work from home culture. And honestly, guys, me personally, I think Zoom's here to stay. I think there is a place for it, and I think now with the whole CV, some people might be going back to work, but many more people are going to choose to work from home as many companies have shifted their policies, right? My girlfriend's company, I'm not going to tell you where she works, but they have shifted their policy to the point where you can come in or you can stay home. It doesn't matter. It's up to you. And that's what a lot of people are doing now, which is just unbelievable, right? So ZM, $212 per share, and crazy world we're living in. This could continue rallying up. It's arguably the hottest stock in the stock market as of right now. Ticker symbol ZM, Zoom Communications. Dig deeper into their earnings, guys. It's an interesting story, what they've been doing over the past couple of months. I really advise you guys to just dig deeper into these stocks and these companies and all of the ones that I talk about here on the channel. Don't just buy anything based on my opinion. Of course, you have to do your own research. So another one here, which we already covered, but it's in the list of the 5, is Tesla. Ticker symbol TSLA. Ultimately, guys, with the SpaceX successful launch, they're in the International Space Station as of right now, 250 miles up in the sky. The stock has been doing great. The stock's kind of piggybacking off of the SpaceX successful launch. And quite honestly, that's not going to last, in my opinion. It might fizzle off. But the truth is, Tesla could continue, or rather that catalyst might fizzle off, the SpaceX catalyst. But Tesla, I think it can still rally up. I think it can still continue pushing up as we got a very bullish sign. Again, we broke 900, 910, but that's not what we're talking about. What I'm looking at, which is very bullish, is we had a strong period of consolidation, guys. You have to realize, for most of the month of May, all of the month pretty much, we were in between 780 to about $820. And if you guys know, and if you follow Tesla, a 6% range, 5-6% window over the span of a month, that's a pretty tight window. That's a pretty tight range for Tesla. So straight consolidation, and now we got the momentum up after the SpaceX launch. That is a very good direction-picking move here because, if we were to dump down, obviously, under 800, that would not be good. But the fact that we're moving up 850, 840, now 900s, that's telling me, okay, bulls are winning, momentum's up, and the stock, because of that, I can see it going mid 900s. So it's very, very worth watching here in the short term. And another one, guys, that just completely crushed it today was SQ, ticker symbol SQ, also known as Square. It was up about 7% today, more like 6.4%, up $5.30. And today we got that breakout sign that we've been waiting for. I personally missed this move. Let me know down below in the comments if you caught it. But we broke $82. We broke $85. Now the chart has opened itself up. Now we have to go back to the 3-year chart to see where SQ could be moving to next. And I've been saying, guys, watch out for 85.90. If this level breaks, we could be going back to all-time highs. As you've noticed how Square over the past 2 years, more like 1 year at this point, has been struggling at 85. We tested it back in February 19. We tested it back in July of 19. We tested it back in February of 2020. And now again we tested it recently, and we finally broke out of the resistance. So for me, guys, I'm watching Square like a hawk. Price target right around $100 at this point, right around $100. I think this channel, this gap, will fill ultimately. Will it fill in a week or two? Nobody knows, right? But ultimately, at some point, I believe SQ could fill the gap from 87, 88 up to $100, which could give it around a 13 to a 15% potential for profit. And another one that just crushed it today is NEO, guys. And let me clear things up here. NEO stock, I've been saying I'm in it, I'm not in it. Let me clear things up. I have a couple different accounts in the stock market. I have a long-term account. I have the M1 Finance account. I have a Roth IRA. I have a swing trading account, day trading account. I have many different accounts. So I own NEO in my long-term account, which these are shares I've accumulated in the $2 range, some in the $3 range, if I'm not mistaken. And that's a long-term account I'm not looking to sell anytime soon. And an account that I'm looking to get into NEO, which is the account that I'm referring to when I say I'm trading this, I'm trading that, right? It's in my swing account. So I don't own any NEO there quite yet. But with today's move of a break above 450, which we talked about yesterday, I'm looking to get in my swing account. So that's just to clear everything up. I own NEO long term, but in my swing account for short-term moves, I don't own it, but I want to potentially get in to accumulate some income from this trade, right? Because long-term accounts, guys, I'm not looking to make income off of those now. But with my trading accounts, obviously, I'm looking to make income now. So I hope that cleared everything up for you guys. And yeah, if this thing pulls down 450, 460 tomorrow, I'm going to be in because we've seen what it's done before. After it's gone above 450, it's filled the gap back to $5 and over $5. So ultimately, NEO offers 10+% potential for profit from where it is right now, which is why it is one of the top 5 stocks that I'm watching right now. So was that 5? 1, 2, 3, 4, 5? Yes, that was 5. DKNG, ZM, Tesla, SQ, and NEO. And my bonus to Shopify is one of them. Shopify had a pretty solid day today as well, a direction-picking day. And let me explain to you guys why. We saw the consolidation in Tesla. That was across the month of May. And Shopify did something similar. Although it wasn't across the month of May, it was across about 4 or 5 trading days. It consolidated, right? Right around 760, 740 to about 760. It consolidated right in that 20-point range. And now we're picking the direction up, right? We're breaking out of the consolidation range, and now we're looking to break into 780, 790, which I think for Shopify is a breakout zone, right? So for tomorrow, I'm looking at 785, 790 and seeing, okay, what are we going to do there? Because from there up to 850, that could be around 6-7%, and we've seen the stock move that much in just a day, one single trading day. So keep your eyes peeled, guys. I'm going to put an alert here, 780. Let's just put 780. Let's just play around 782. So we'll see what happens there at $782 tomorrow for Shopify. And another one here, guys, which honestly, there's a couple more that we can talk about, but one that I've been talking about a lot on the channel is NVIDIA. NVIDIA, it's in a funky spot. It's kind of in that consolidation spot where Shopify is, where it was before it broke up, and I'm kind of looking to see if NVIDIA does the same. We're consolidating a bit here. On the 5-day, 5-minute, you guys can see it. We've slowly been pushing up, but ultimately it looks like consolidation over the past 2 days of trading. So I want to see, are we going to test 355, 360? That's the next major resistance that I'm seeing here on NVIDIA. We could end up breaking that, maybe moving up to 370. It's worth watching. And another thing worth watching is the dividend. Dividend is being paid out on the 4th of this month, which is in 2 days. And a lot of people have misconceptions about stocks and dividends. They feel like that, they could buy a stock, get the dividend, and just sell it. Guys, that's not how it works. So honestly, we might see a drop in NVIDIA stock on the 4th of this month, a drop of the size of the dividend. That's how it works, guys. A lot of people, again, they buy a stock before the ex-dividend date and they want to hold just for the dividend and sell. Well, stocks, they go down the dividend payment on the day of the payment. So this would not work. If you guys have no idea what I'm talking about, I really heavily advise you do more research into that, because I thought the same thing as a beginner. I was like, wait a second, dividend payments, why don't you just take money and buy a dividend stock and then sell it, get the dividend? Because the stock goes down the amount of the dividend when it pays the dividend. So in theory, you're not making anything. If anything, you're losing money if you do that strategy. So let me know down below in the comments if you guys know what I'm talking about. And if not, I heavily really, guys, recommend you guys to look into that, because not many people understand that concept and they don't really know about it. So let me know, guys, down below in the comments your thoughts. As always, I'm going to wrap up the video here. If you did enjoy it, as always, hit that like button down below. Consider subscribing to the channel as well if you want to see daily updates, daily market updates like this. And again, if you want 2 free stocks from Webull valued up to $1,400, check that link down below in the description box, as well as the Discord chat and Facebook group. Those are also free of charge to join. So I'll catch you all in the next video. Thanks again for watching. As always, stay safe out there, guys, in these crazy times that we're living. Stay safe as always. Peace out.